Yo, what's going on, everybody? Welcome back to another section of the course. Hopefully you guys have been enjoying the course so far. Hopefully you guys have been taking a lot of notes. But anyways, in this section we're going to be going over support and resistance, which again is a very similar concept to supply and demand. Let me kind of just zoom in here so you guys can probably see a little bit better. It's a very similar concept to supply and demand, except we're going to be using this on our lower time frame. So any of you scalpers, intraday traders, this is going to really apply more to you. Supply and demand is going to be mainly for swing traders. Even though we can take intraday trades from the supply and demand levels, but generally they're all the same concept. So typically when we talk about supporting resistance, we're going to be using our supporting resistance levels and marking them off based off of the hourly time frame and the 4-hour time frame. Now we're going to be using our main levels of supporting resistance, and we're also going to be learning how to draw random lines of supporting resistance for more minor levels and whatever the case may be is. So, like I said, support and resistance is practically the same concept as supply and demand. It just works on smaller time frames. So, supporting resistance, you can mark them off anywhere between the 5-minute to the 4-hour time frame. Typically, supply and demand is going to be mainly for a daily or a weekly time frame is where you're going to be marking them off. Because remember, supply and demand works off of, obviously, supply and demand, but the bigger hedge funds, banks, institutions are going to be the ones who are trading off of these levels. And there's going to be support and resistance levels within these supply and demand levels. And you could pretty much take a trade within those major supply and demand levels and take trades off of the more minor support and resistance levels. So they're predominantly used for intraday setups. And again, they're great for the best buying and selling opportunities you could potentially get within the markets. They're the ones that make the most sense. They have way more pros and breakout setups. And again, that's because you have a great stop loss and take profit placement. It's super easy and shouldn't be too difficult to set your stop losses and take profits. So again, the overall concept is the same. You want to actually end up buying at support and selling at resistance. Now, there's going to be 3 forms of support and resistance, and there's going to be 3 forms of rejection. There's going to be your touch, there's going to be your gap, there's going to be your overlap. So, like I said previously, you have your touch, you have your gap, and you have your overlap. The example here in black is going to be an overlap or a touch, my apologies. The example in red is going to be an overlap, and the example in yellow is going to be a gap. So notice how I drew my line of support and resistance right here. Now again, support and resistance should always be considered as an overall zone, but for the example, of the video, I kind of just have a line. Now personally, when it comes down to my trading, I like to be as accurate as possible with my support and resistance levels. And this is why I kind of just make one horizontal line, and this is where I place my level. Now, we're going to go over placement in the next following sections, but just so you guys can get it. So here is the touch. Notice how price just touched it, and we had a big rejection to the opposite direction. And then same thing kind of again here. We have a little bit of an overlap, but it's pretty much a touch. And then we have an overlap here. Notice how the candles kind of closed over the level of resistance in this case, and then price ended up coming back down and closing back under with this candlestick here. That's going to be considered our overlap. And then here's our gap, because we simply just gapped the level of resistance. Notice again how there's a gap in between the resistance and the wicks here before price moved in the opposite direction. Now, let me show you guys what a broken level of support and resistance looks like. So like I was saying previously, support and resistance is an overall zone. So I drew my level from the close of this bullish candlestick here, the lowest close, to the lowest low here, which is this wick here. Notice how we had some consolidation here, and then price ended up coming back down and then rejecting, moving the opposite direction. Now, a break of resistance, or in this case support, is notice how this candle came all the way down, closed under support, and then this candle closed under support here. This is the 2 candle confirmation that we need for a broken level of support, and it's pretty much the same thing with resistance. 2 candlesticks have to actually close over the level of resistance. Now, this is what pretty much a fake out kind of looks like. where you have a candlestick close above, and then you have the confirmation break with this candlestick here, but the following candle closes right back under, making this level of resistance actually rejected there. So this is going to be what a fake out looks like. Now, hopefully you guys do understand the basic concepts. Again, this is a very simple concept, but again, you know, support is going to be used as your floor. And when we're trading support and resistance, typically, like let's say we're going to take an entry here after this candlestick right here, and we decide to press buy here. Our stop loss is going to be going under support, and our take profit is going to be resistance, right? Giving us a great risk to reward ratio, along with a better area to place our stop loss, because support is what's protecting our stop loss from actually getting hit. Now, again, everything works in probabilities. Just because you buy at support doesn't mean that it will always 100% of the time reject it, right? Sometimes it may just break. Sometimes it may reject it a little bit and then break. You know, again, this is a game of probabilities. More importantly, trading isn't just technical analysis. It is managing risk. I will see everybody in the next section, where we're going to be pretty much drawing our levels of support and resistance and how you can place them with accuracy.